Hello and welcome to episode 34 of the Nunemaker Mortgage Podcast for the week of March 6th, 2023. This week's episode is coming out on Friday because the BLS Jobs report. This was a big one. It's going to be a big market mover, I knew, because pretty much all of February there was this huge reaction to an extremely hot jobs report, which emboldened Fed members to talk about increasing projected future hike rates. There was indications that the economy was just super duper hot, even though there was a lot of flaws in that report. So everybody was kind of looking at this report to see whether that trend would continue or if we would start to see cracks. Well, we got the jobs report, and that still showed 311,000 jobs created, but here come the cracks. The bond market actually liked this report for a couple reasons. The unemployment rate moved up from 3.4 to 3.6%. The number of people recently employed, less than 5 weeks, jumped up by a huge 343,000 people. Earnings, hourly hours were down. So while this was a strong jobs report from the jobs created, if you dug a little bit deeper, the bond market started to see that, okay, this was a flawed number that came out in February, and the bond market has been rebounding considerably this morning, which in general has made rates about quarter to 0.375% better in a really short amount of time, which I know is music to all of our ears. Now, all eyes are now on Tuesday's CPI inflation report. That's next week's big market mover. Stay tuned on that. In the Mortgage Corner, I want to talk briefly about some upcoming potential changes that FHA has announced where they're going to start penalizing clients based upon their debt-to-income ratio. And I can hear you saying, Alex, I do not care about this, but you should, or at least understand it from a 30,000-foot kind of view. This is going to be something that you might hear clients talk about, and you need to at least understand how this looks or how this will impact them. Now, up until this point, someone's debt-to-income ratio didn't impact the interest rate and or the points that it cost them. Either the ratio was good enough or it wasn't, approved or not. Now, FHA stated earlier this year that they're going to start implementing changes to their pricing model, where if a client's debt-to-income ratio strays above a certain threshold, the loan, while it can still be approved, they're instituting loan-level pricing adjustments, which ultimately get passed on to the consumer. So behind the scenes in my world, income, it changes all the time. It might change at different points during the lending process as we get more information. Let's say that you have an hourly worker who, once they submit a new batch of pay stubs, they were pre-approved and they get new ones, and they aren't working as many hours as they have in the past, or they get a reduction in the hours. Now, we have to adjust their income down. Now, in some cases, I'm saying if that income or that debt-to-income ratio strays below that, that could mean about 0.5% on the points adjustment, meaning same interest rate, but it's going to cost them 0.5% more. This is not something that's been customary in the mortgage industry, and there will inevitably be angry clients thinking that they've been promised one thing and delivered another. I had family members who have done this, they've never heard of this, or, my cousin's a mortgage lender and, they never heard of it. This is something new. So in some cases, what I'm telling you, as I'm sure you well know, that there are mortgage lenders who will do something that's not above board, but this is a change that's going to impact all mortgage lenders, even trustworthy ones. So if you have a client mentioning that is happening later on this year, you are now informed on why this might have occurred. It's not a bait and switch, just that their income has legitimately changed. Finally, our quote of the week comes from good old Ricky Bobby. If you ain't first, you're last. Have a great week. If I can help you or any of your clients with any questions or pre-approvals, let me know. They can visit me at homeloanswithalex.com. Have a great week.